Hi, YouTube, Facebook. How are you guys doing? Hi, Instagram. We've got some exciting stuff to go over today. I haven't been this excited about a market update in a little while. My name is Teresa Timms. I'm president of TDR Mortgage and Real Estate Group in lovely Upland, California, and I serve the entire Southern California market. Orange County, San Diego, Riverside, San Bernardino, Los Angeles. So feel free to pick up the phone and give me a call if you're looking for mortgage or real estate information. Jules, take it away, my hostess with the mostest.
Okay, guys, so we did not go live last Tuesday. So on Thursday, we did like a quick, super quick market update. So today we're going to have a more in-depth one. Then we're also going to touch on what we're going to talk about on Thursday, which is Schedule E and qualifying Schedule E income and corporate income. So that's what we're going to be doing.
That's fun stuff, right, Jules?
And then we're going to be going more in depth on that on Thursday.
Yes. Okay, well, thank you. All right, so that's what we're doing here today. Let's get started. So that Pfizer news, how about that Pfizer news? Right on time too, right? Right after the election, Pfizer comes in with this 90% cure rate news. So 90% effective rate for a virus. That's extremely impressive and extremely timely. So thank you, Pfizer. So the news with Pfizer is that virus is usually at an effective rate. Virus cures or the vaccinations have an effective rate of 40 or 50%. And so for Pfizer to come out with this news that it's a 90% essentially cure rate or stop rate, all of the stocks that have been suppressed because of the uncertainty in the market, such as the cruise line industry. My friend Manny Soto mentioned Carnival. So yeah, people are going to start to get back out there again. So this was really, really big news for the market. So Marriott saw, and just think of all the ancillary stocks that have been suppressed. You know, Marriott, the cruise industry saw a lot of gains, like a lot of gains yesterday and today. So that's really good news. And on the flip side, those companies that were largely tech-oriented, online-oriented, like think about Zoom, saw losses yesterday. So that's what's going on in the market. Relative to interest rates and demand, we did see a slowdown in demand the last week or so, a little bit before the election, and I think a little bit after the election, just because of so much uncertainty. People wanted to see how things shook out before they jumped into a really big investment. So on the market news, that's the biggest thing that I think. And then traditionally this time of year, you know, people are really focused on the holidays. And so we kind of die down just a little bit, but with the extreme shortage of inventory, you guys get to hear that again. With the extreme shortage of inventory, there's still lots of people out there looking to buy. One of the things that I'm seeing a lot and hearing a lot is that you have these competitive market situations. And then when people realize, hey, I paid $550 for this house, but the appraisal came in at $500, they're not so willing to part with that $50,000 to buy this house, $50,000 over what it's really worth. So we are seeing a lot of churn. We're seeing houses come on the market, go pending, and then show back up again. So hopefully with this news of the vaccine and the advent of, or the possibility of having the virus under control, we can get back to the business of selling homes and living our lives and going to concerts and things like that. But that's, from what everyone said, that's on the horizon. But relative to our interest rates, the election wasn't too bad on us. And as I reported last week, with the Senate pretty much clenched, I mean, we can't say for certain 100% right now, because a lot of the states still aren't all the way closed, and a lot of the races are still too close to call. But it seems like the Senate has things locked up, and and the market responded very positively to that last week. So we're not seeing nothing to see here, folks. Nothing to see here in interest rates is what we're seeing. On a conventional purchase or refinance, 30-year fixed 2.375, and I have the APR. Look at that in the description. 15-year at 1.99. So the rates are actually, I think, a tiny little bit better than where we were before the election. We saw rates slightly move up a couple weeks before the election in anticipation of what was to come. And an FHA loan, gosh, they're just giving these rates away. You can get an FHA loan at 2.625, which is a pretty amazing rate. I just did an analysis with one of my friends where he's buying a $1.75 million home, and he's getting, I think off the top of my head, I think it was like 2.875 on a 30-year fixed. The payment was $5,400, 2.8, but at 4.5, it became $7,400 or $7,500. Interest rates, folks, play a big part in affordability. And that's why you're still seeing such strong demand. And it just, it makes sense when the payment's affordable. It makes sense for a lot of people. So and also I was using, keep in mind that when you see those low rates, that's a low rate, right? Well, if you have like a 700 credit score and 10% equity, you're not getting 2.375. It doesn't work like that. So a little disclaimer that I will give you is that those rates that I just quoted on the conventional, the 30-year and the 15-year, were at a $750 sales price, which is a $450 loan amount, and a 760 credit score. So that's at a 25% loan to value, or in the mortgage industry, we call that LTV. Okay. So that's my market update there. Into the market update.
Alrighty. Okay, so can we touch on what we're going to talk about on Thursday, Schedule E, and then corporate income?
Yeah, the income gets pretty tricky when you're dealing with. So sometimes income is just tricky anyway. There's a skill to it. There's a way that you do it to have success, especially when people are kind of like right on the edge. And a lot of times, people that have multiple properties and corporations and businesses, these are people that would typically have write-offs. So people that have write-offs, we have to be very careful to calculate their income, and it becomes complex. And so you have to educate yourself. As a loan person, I have to educate myself on the guidelines. Knowing and understanding the guidelines gives me a huge advantage on being successful. I'm closing a loan right now from Chase. Thank you very much. I'm actually closing 2 loans right now that Chase declined and took forever. And the reason that they were declined with Chase and they're not declined with TDR Mortgage is that I know and understand guidelines. And if something doesn't fit, like, I find a way to figure it out. I mean, within reason. Of course, I can't magically make somebody qualify for $1 million purchase when they really only qualify for $400,000. But when it's close, when it's really close, we can get in there and do a detailed analysis of what do we need to do to make this happen for the customer. And that's one of my specialties. And I have a little example. So we're going to talk about corporate income. Corporate income passes through to your federal Form 1040s. A lot of times when I'm dealing with people that have multiple corporations, before they send me all of their corporate docs, I want to see their federal Form 1040s. So S Corps pass through, LLCs show up. The C Corps don't always, but they show up in a form or fashion that when we see the 1040s, we know what we're looking at, and then we know exactly what documents to ask for. Schedule E, which is supplemental income or loss. This is when people own properties. Can you see that, Jules? Schedule E. So when people own multiple properties, this is the document that they submit to their tax person and gets filed with the IRS. And a lot of times on these documents, you'll see that this person, I don't know, like right here is showing $19,000 of income. But if you look down at the bottom, the net is only $10,000. Oh, wait, my finger's on the wrong thing. So the net is only $10,000. So there's formulas and things that we do to help people figure out how to qualify. And if you don't have someone that's experienced and that knows this stuff, and they're relying on their processor to tell you what to do, or they're relying on the underwriter to tell you whether it's a loan or not, you might as well forget about it. You know how many times I tell processors and I tell underwriters how to do something, and I'm not saying it in like a frivolous fashion, because I don't tell anybody what to do. So, I mean, I do, but there's a way that you say things, and there's a way that you document your work product in a way that it can go through underwriting, or that you can get things through. So it's knowing and understanding these things that gives loan brokers and loan professionals that really know and understand these things a tried and true advantage over those that don't. So that's what we'll be talking. I'll just kind of go into some things like that. And hey, I wanted to tell you, so one of the things I want to talk about is tips and tricks for self-employed people to qualify. So one thing that you can do, let's see, I have a comment here really fast before I get into this. Jules, are there any questions there? No, just people saying hello.
Yeah.
Instagram. I love you, Instagram. You're so good to me. Well, you guys are good to me too, but Instagram shows me a lot of love all the time. And it's like, I wish Instagram could stream live on StreamYard. Here I have a comment from Raylene. Corporate income is a big pain in the ass. Yes, it is. Yes, it is. True that. Right now we have somebody like with 5 corporations, 1040s, W-2s. And yeah, you really have to get down and there are worksheets for all that stuff. So it is a pain in the ass. Okay, so tips or tricks to get your income, self-employed people to income qualify. You're getting ready to file your taxes for 2020. And so one of the things that we do, a consult that we do for a lot of our clients, is when we looked at your income in 18-19, you don't qualify. We say, hey, come back to us in October, November, and let's talk about what you need to show to qualify to make homeownership a priority in 2020. So if homeownership is one of your goals and you're self-employed, you need to get in touch with our office so that we can help you figure out, okay, in 19, you showed $80,000, but you really need to show $125,000 to qualify for your home purchase at this, X amount of home 550 sales price that you want, right? Because the 450 house is not for you. You'd rather stay renting. You have to have 550. So we can give you a path to that home ownership by telling you what you need to report on your taxes in 2020. And the IRS actually encourages this because they love for people to pay more in taxes. So I feel like I'm just doing my American duty in trying to get people to pay more taxes. But really, I'm doing it to help people qualify for home loans. And I've been helping people qualify for mortgages and helping people become homeowners since 1998. And one of my favorite things to do are purchases, especially for people that have never owned homes before or didn't even know that they could even own a home. It's really, really exciting. So I'm happy to share my knowledge with you all.
Alrighty. Is that all we want to talk about today?
Yeah, I want you guys to tune in around 3-ish on Thursday. We'll go a little bit deeper into corporate income. And then you guys can ask questions too. There's a lot of people out of work right now in the entertainment industry and the film, music industry, which is in the entertainment industry. So we have a lot of artists and musicians and ancillary offshoots to that people, maybe they have some income, but it's not enough to qualify. So we'll talk about that some more. Now I had a question by Dre 1979. Are FHA limits going up? Dre, that's an awesome question. And yeah, they go up every year. And I would expect that since we have gone up, God, I don't even know how much we've gone up this year, but I don't know. I'm just going to probably gone up like 10% or 12% this year, kind of like on average. So when that happens, FHA loan limits go up, and they usually announce it in December. And I would say most lenders don't honor that increase until January, but we have a lending partner. We have a lending partner where we can originate those loans and close them in ahead of that price. So like the the conventional loan limit right now is 510 and the high balance is 765. So I bet that goes up a good $30,000 to $50,000 on each one. And then FHA in San Bernardino County is like 452 or 453. So I bet you that goes up to 475. So yeah, when that comes out, we will let you all know. Now, Raylene has another question. My girl, what about corporate income when they have their rentals under their corp name? Under the corporation name, rental, we can't use what percent? Well, Raylene, that is an awesome question. And it all goes back into, it's no longer a Schedule E formula on the 1040s. It's more of a corporate income analysis that's going to go into the self-employed form, the SAM form, or that other form. I can't think of the name of it. So yeah, it doesn't work exactly like the 1040s, but what a great question. I'll write that down and have an exact answer for you on Thursday. So be sure to tune in.
Alrighty. Somebody made a comment. I don't know how much it has to do with our live. The only ones that win in raising minimum wage as well as corporate taxes is big government. Just saying.
Thank you for the comment. That's awesome. All right, Manny, why don't you ask a question, Mr. Smarty Pants, Mr. Financier, Mr. Man with all the answers. I love Manny Soto. He owns a financial firm that's located all over the place. And I'm happy to give you a shout out whenever you would like. We need to do a live too. It's been a minute. So I'm looking forward to getting together with you here soon. Okay, I think that's it. So if you or someone you know is looking to buy, sell, or refinance in Southern California, you pick up that phone and give me a call at 909-920-3500. And you can find me on the web at the SoCalLoanPro.com. Log on and get started with a short or long application. Call or text. We would love to hear from you.
Alrighty. Bye, guys. Thank you for tuning in.